Good morning, everyone, and welcome to this morning's London Forex webinar, and thank you for your patience. Slightly later start. We've been waiting for someone to come and sort something out at the house, and they haven't sort of got here yet. And so, you know, we decide whether to start or what. So if we stop for a couple of minutes, we just have to let someone into the garden. Okay. Thank you so much for coming along to this session to see what is going on in the forex market, and more importantly, what is likely to be happening on some of the charts. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just for the benefit of those of you who perhaps are coming along for the first time, I had a quick look down the list. I can see some of our program students and our quantum trading users, but I also see some names that I don't recognize, and I think it's the first time that you've come along. But basically, we're going to be looking at the charts through the prism of what we call volume price analysis, and it's looking at not only just the price action, but also the volume, which is the activity to validate, to confirm whether what we're seeing in terms of price action is genuine or not. And all the details on the methodology is explained in the books that are on Amazon. But we don't just look at the technical picture, we also look at what's happening in fundamental news, and we also look at related markets. And by related markets, I mean the other three capital markets. It could be commodities, it could be the bonds, or it could be equity markets for sentiment, for you know, excuse me, instruments that are linked to certain currencies in the forex. For example, the Canadian dollar. The Canadian dollar, Canada is a big oil producer, so what is happening with the oil in the oil market can impact the moves on in the Canadian pairs. So that's what we mean by related markets. So it's not just sentiment in terms of whether it's risk on, risk off, but there is a direct relationship between certain currencies and other instruments in the market. What we've also done, those of you who are already use our indicators from quantum trading, and certainly the program students will be aware of these indicators. They're part of a complete suite of indicators that David and I have developed, really to help us disassemble this market. As I've said before, in the forex market, is you're trading one currency against another. One is going to be rising, obviously the other is going to be falling. One is going to be bought strongly, the other sold strongly. And what we first have to do is we want to see where the money is flowing into the individual currencies, which is where we have our currency strength indicators. So we see what's rising, what's falling. Is a currency at an extreme? Is it ready perhaps to roll over? And with this particular indicator, as you'll see, it will also tell us when there actually isn't anything happening in a currency. It's just not going anywhere. You can see here it's maybe moving along in the center of the indicator, and it tells us there's no firm directional bias for that particular currency. We then pair the currencies, and you can do that on the CSI itself, but we also have what we call the matrix that ranks the pairs in terms of you know, the best performing, the worst performing, the strongest, the weakest. We have a currency array, which really looks at the strength of trend in a particular move. And the final one in this suite of what we call the currency dashboard is our currency heat map, which actually looks at the performance of the pairs across multiple time frames and also ranks them. It uses a different algorithm to the array and the matrix. That's just part. The dashboard is the other forex specific ones. We have others. We have support and resistance indicators, volatility indicators, and trend indicators. Because with volume price analysis, yes, it is volume and price action, but it is also candles, candle patterns, support and resistance. Hugely important in being able to analyze what is happening on the chart that you're looking at, but also in what we call multiple time frames, because the fifth element of VPA is actually time, and it's time, as I said, in multiple timeframes. And I've got a couple of examples actually of what I mean by that. I have a lot of emails with questions about VPA, and in fact I find them really, really useful, because it not only does it bring home to me how traders are interpreting the methodology, but it also can provide some very nice lessons, if you like, to explain the methodology in more detail. Right, before we head off to the charts very, very quickly. Obviously, we're in the middle of it's the middle of August. It's the heights of of summer. As we can see here today, there really isn't any news of note. I think the only thing certainly to do with the European currencies, the London currencies, the pound. We've got a 30-year bond auction, but we don't know when that is going to be. It could be during the session, it could be later, it could be even this afternoon, but nothing really of great note today. Generally speaking, August is normally a quiet month, in the sense that it's summer, a lot of people are on holiday. Volatility has certainly died in the market, in terms of if we look at the indices, they are creeping higher. There's not a huge range, and when volatility is low, and combined with this time of year when liquidity is also, not at its not very deep, because simply people aren't around, it can make for very, very tricky trading. It's also a bit of a paradox, because you say we've got low volatility, we've also got low liquidity, and then when things do move, it can be a sort of very jerky, very spiky moves, as it were. But it's just really the time of year. What's happening the rest of the week? It may be a little bit quiet this morning. We've got the Fed minutes tomorrow, and we've got the ECB minutes tomorrow on Thursday. And against all that, we also have, I believe, Brexit talks are resuming, although I've read they're not as, nothing contentious is expected this week. That's going to be in September. Everything's going to be in September when the market comes back full time. And of course, this week we have the start of the US, officially the start of the US elections. I believe that Biden and Harris are going to be formally nominated. I think Trump is going to be formally nominated for the Republican Party. And this is really going to be it's the biggie in a background, and it's really going to dominate everything until the election itself, and Lord knows what's going to happen, because you may have read there's some sort of issue with postal voting, and this all the usual carryings on and goings on that are associated with the US presidential elections. And really, it's being called for a Democratic win. We just don't know. I don't think the market knows, quite frankly. The market is kind of ignoring it for the time being. It's creeping higher. All-time highs are being achieved, but very, very narrow price action, as I said, because of the low volatility. And we can see that reflected in the VIX. But if you want to pop over and just make a note of these dates, it's a very useful little site that I've come across. And just mark them up somewhere, because they are really going to start impacting what is happening on the markets. And then gradually, as we come to election day, it'll be ramping up. But unlike the elections that we have here in the UK, they're not even sure when the result, a definitive result, is going to be is going to be known. And there's even talk about if Trump loses, is he going to accept the result? So as I said, lots and lots going on, but And that's for the future and something to be very much aware of. A couple of other things of note that you might like to check out. Just to mention again, on the volatility side, if you want to go and check out the pairs that perhaps you're trading, and to see whether they're trading in a nice range, if you head over to the UK version of investing.com, all you do is you highlight a pair that you're interested in, and this is interesting. This is the Euro Aussie. It's one of the cross pairs, and we can see here. This is what I mean by volatility. It's gradually, as we can see here. This is back on the 22nd of July, but you can see this is the number of pips on the day. It's going down and down. I mean, the Euro Aussie can deliver some great trades anyway, but you can see that the decrease in the range, and the narrower that gets, then the trickier sometimes it can be. And the site also tells you when is the pair most active in terms of the pips that are available, which is quite nice, and also the actual days when you can you are hopefully going to could get a nice trade. So that's a nice sign. And the other thing with the euro as well, we mentioned it last week. I mean, traders really love the euro at the moment. This is the last week's CFTC data. And we made an all-time high last week, and in fact there are even more people pouring into having long positions on the euro. And as I explained about the COP data, it's not for intraday trading, but it's just interesting to see when you have these extreme positions, because as the position gets more and more extreme, then the likelihood is there is going to be a reaction. When the trade is so skewed to one side, then eventually it's like an elastic band. You pull, and eventually it will snap, and it will snap back. So it's just useful to keep an eye on for the euro. You can keep an eye on it for all the currencies there. I've just pulled the euro up because, as I said, last week it was 180, and it's actually almost 200. So the longs are really piling into the euro at the moment. Right, so that's a quick summary of what's happening, what's not been happening. And interestingly, having a look at the CSI, this is on the hourly chart again, just a sort of an overview of what happened overnight and which currencies are now moving strongly. I wrote about this yesterday when I left it. The dollar has obviously been selling off. It's had an attempt to rise, and now it's back. It's being sold off yet again. The other thing you have to remember about when markets are overextended or currencies are overextended is they can stay overextended for an awful long time. But the more they stay overextended, then when they do reverse, you can get a really nice move. And an example of that was actually the New Zealand. It has been fairly beaten down, and in fact it did actually reverse in the US session yesterday, but hasn't gone very far. It's now being sold off again. The yen is rising, really pretty much against the kind of sentiment, because the indices are trying to rise, and normally you would find if the indices are moving, certainly moving higher strongly, then the yen would be sold. But there's a little bit of a divergence there. Maybe the yen is telling us something that the market hasn't quite cottoned onto. Nice buy on the pound. The euro is actually selling off, which is, as I said, contrary to what is at the CFTC, but that is a longer term sentiment indicator. It's not, it's interesting to have, but, if you're on the shorter time frames, you really have to, perhaps park it at the back of your mind. But if there's an opportunity to sell the euro and it's a nice setup, then fine. It's perfectly okay to take the trade. Now, what we want to see on this indicator as well is, because what it also tells you, as I said, it tells us what's moving. It also tells us by the steepness of the lines, as it were, whether it's a nice strong move. And by that I mean, the angle. So here with the pound, it's a nice sort of, as I said, a nice strong angle. So we know there's there's some good buying in the pound at the moment. Compare it to the Canadian, which is the purple line. Yeah, it's going up, but it's kind of it's kind of creeping up. That also tells us, it gives us an immediate insight into how this move is developing in that currency. The euro looks like, okay, nice turn there. The New Zealand, yeah, it's turning over, but the momentum in that hasn't actually sort of got going as it were. And the dollar is kind of stuck here at the bottom. Is it going to go lower? Yes, it can, but when it reverses, great. We'll hopefully you'll be there to catch it in the pair, maybe the pair of your choice, or a trading opportunity that you're looking for. And what I also want to cover is I want to cover a couple of things with when we look at pairs in different time frames. What you see in one time frame is maybe contra to what is happening in a slower time frame, because what we have to do as understand as traders is that the price action on one chart, you may see a fantastic setup. You may think, right, I can see a trading opportunity, but you have to set it in the context of a slower time frames. Now David and I will look at maybe 3, maybe 4 time frames, but for a lot of traders, that's a little bit too much. But all I would say is have a look at least 2. And the best way I can describe that for you, explain it to you, in fact, this is the pound New Zealand. It's one that I picked up on this morning, and I think David has that as well. And I just want to explain it. I'll do it 2 ways, actually, by what I mean by this. This was a question that I got from a trader. This is actually a stock, because it doesn't matter that it's a stock. VPA works across all the markets, which is why you've got nothing's moving at the moment, because obviously the US market's closed. It's quite a volatile stock. It's only $10. It's also, I think it's a biotech stock, so the sector's quite volatile anyway. And the question he asked me was it was to do with this price action over here. And he said, well, he had this, he doesn't have the indicators, he just had a chart with the price action and the volume underneath, and he had this huge up bar here, a lot of volume underneath it. But those of you who have our indicators would know, because this piece of price action was outside of the average true range, it triggered what we call the volatility indicator. And there's 2 things happen when this is triggered. It will either, well, 3 things. First of all, it will reverse into the spread of the price action. This is sudden momentum that comes into the market, and it will either then reverse or it will congest. Now, on this occasion, what it also created was this very nice 2-bar reversal. The volume under the second candle wasn't massive, but just based on the candle pattern itself, the fact that it was a 2-bar reversal was, is sufficient to tell you that something, this move is, if anything, is a trap move. The volatility indicator does that. It highlights, as I said, momentum coming in, prices outside of the average true range, and this is where a lot of traders get trapped, because they see these fast and furious moves. FOMO kicks in. Oh my goodness, it's suddenly shot up. Oh, I don't want to miss it, and in they rush. Now, if we look back to this candle here, we had a similar situation where we had the volatility triggered again, and in fact we did have what I said, either one of 2 options. You did actually get a congestion into the spread of the candle, and in fact, to push it up again, we had another volatility trigger, and then we had the reversal. That's great. You think, okay, how he was trading it, he just wanted to know, why it didn't carry on higher. There was lots of volume under here. There wasn't a lot of volume under there. Fine. So I explained all that but he was only looking at one time frame. When you look at this piece of price action on the 10-minute chart, it actually is here. It's under this, it's really captured in this shooting star. But much more important to that is the fact that this MBOT is actually trading in a range. Well, how do we know it's trading a range? This is where support and resistance comes in. First of all, you have this strong support line here. We know it's strong because on this particular indicator for NinjaTrader, it's that you can see here, it's quite a thick line. It's not like this little thin one here. That means it's been tested on a number of occasions. That means the support line is quite strong, and we can see the number of times it was tested here. You also have your trading between that and the volume point of control. Now, the volume point of control, if you want to, there's a number of ways you can look at this indicator. First of all, you can look at it as the fulcrum of the market, in the sense that traders, as we can see here, they're perfectly happy to trade around this fulcrum point. There's no firm direction. There is a congestion. It's in consolidation. We can see here there's been attempts to break lower. The volatility was triggered straight back onto the support platform, and moving sideways, and an attempt to break higher on the 2-minute chart. Maybe that could have been a potential trade. That's not for me to say whether it was is a yes or a no. You as a trader have to make that decision, but you can't really make that decision on one time frame unless you see that piece of price action in the context of a slower chart. I'm just suggesting the 2 minutes and the 10 minutes. It's up to you. It's very much trial and error what two time frames you put together. I just happen to find that the 2 and the 10 actually work quite well. So if you were a fast scalping trader, maybe there was enough in this little move higher reflected on the 2-minute chart, but because also you are between this strong resistance and this strong support, you get an awful lot of choppy price action on the 2-minute chart. You may see an opportunity, fine. That's up to you. So the volume point of control, it is the fulcrum. There is no firm bias one way or another. Another way to look at this, because it's designed around the principles of market profile, it's often referred to as the value area. The value area being, as I said, exactly that. There's fair value. The market has decided, yeah, you're quite happy with that. We're just going to trade around it. There's nothing, there's no news. There is nothing to drive that price either firmly in one direction or the other. And this is what I highlighted to him. I said, yeah, you are right. On the 2-minute chart, it is very choppy. You've got the volatility, you've got this 2-bar reversal, and then suddenly it seems to go back in the opposite direction. But you have to see it in the context of what is happening on a slower time frame. And this may be completely contra to what is happening on, a time frame higher up, as it were. Once you can look at a chart in this way, using a VPA in terms of price action and volume, but also support and resistance, and what the support and resistance explain to you is, what is the structure? What are you looking at? At the moment, on the 10-minute chart, it is looking, it is moving sideways. And interestingly, one of the things he mentioned to me, that he, looking at the 2-minute chart, he was going to take a bearish, he had a bearish view. But when you look at the 10-minute chart, the price is actually at the VPOC, and it is possibly looking to move higher. I don't know what is going to happen to MBOT today, but it's interesting that his view was based on the 2-minute, whereas in fact, if you look at a slower time, the 10-minute chart, it actually looks as though, well, if it manages to clear the volume point of control, there's no reason why it can't actually go back to because as you can see here, it actually opened, gapped up by quite a lot. So that was that one. And another look is, if you remember, if you were with us last week, hopefully it will come up here. This is up on my Facebook. This is actually the pound yen. And we looked at the pound yen, and we looked at, or certainly I looked at it in terms of, we should see here, we had a really nice run higher. Then we had this initial sign of weakness, which was, as I said, this shooting star with a lot of volume. And this is another question I have all the time. Where do I get in? You know, what am I supposed to do? What are the signals that I'm supposed to see? And, you know, this is a strong, this is a strong signal. It's a strong signal, not just from a price action perspective, because you have an attempt to rise and a fallback, and on on quite nice volume here as well. But it is just that, it is just one signal. And there are traders who will go off that signal and say, yeah, I'm going to take, and sometimes it does, and you get a V shape, you do get a complete reversal. But in fact, what happened was, because the volume point of control, it did reverse, and we did have a down candle. But actually what happened, it eventually went into a congestion phase. There were further weak signals by these candles with wicks to the top here and here and here. And in fact, what you could say, from Wyckoff's point of view, you could say, well, it's almost like a distribution phase. So you had the move higher, initial signal of weakness, it kind of followed through, but didn't it? You had the support. This is a volume-based support from the volume point of control, moved into a sideways sort of distribution, and then it went lower. And this is what can happen. So when you see a strong signal like this, sometimes you do have to wait for these signals to develop. And in fact, it took this one, it took this one. You had a 2-bar reversal and went back the other way. It took this one. There was buying under this candle. So as I said, it is basically in a congestion. And then when it eventually broke, it did actually break low and carry on low. But if you look at the chart for the pound yen at this time, which I think I've got here, hopefully I can bring it up. It was last Tuesday, which was the 11th. That little cycle of price action that we saw there, where is it here? Let's have a look. Let's have a look here. 12 o'clock was there. It was in this candle. This is the hourly candle, and in fact, the trend, if you like, for the pound yen was actually higher. The pair was actually moving higher, but because there was this volatility candle triggered on the hour, what you saw on the 10-minute was you saw a complete sort of, if you like, a price cycle where you had a move higher, you had a sign of weakness, you had a congestion, and you did actually have a sort of distribution, but it was totally against what was going on the hourly chart. So that's my little take on VPA, support and resistance, what you need to look for on the charts. As I said, these are it's easier to give these lessons on things that either people have sent me or screenshots that I've taken, but you actually, now let's have a look at them at the live edge of the market, and I will pass over to David. I've actually been watching the pound in New Zealand based on what's been happening on the CSI. I actually have this. Let's have a look here. Let's have a look. I've got two. You've got it as well, have you? Fantastic. We picked the right one. And what I have here is I actually put the individual currency lines on their own chart. On MT5, I have them running at the bottom of the chart, but on Ninja, I have them on their individual charts, but you can do that on MT4, MT5 as well. And what am I looking at here? Well, I've got the pound yen. Well, I've got them moving in the same direction. Well, what does that tell me? There's no divergence. So for the time being, it's probably not one to, pay much attention to. Whereas on the pound New Zealand, I've actually got this really nice divergence. I've got the pound rising nicely. I've got the New Zealand falling. Certainly the pound is overextended at the moment. It's at 93. The numbers are there simply to give context to the move, as it were. They don't actually mean anything per se. It's just context. Now, that's clearly overextended. Is it going to roll over? Possibly. We'd have to look at the other time frames. But the New Zealand certainly has a little bit way to go. But that's what we want to see. We want to see these really nice, strong divergence, and how that translates. That translates into the move that we see at the moment. But looking back on the move, this is the 10-minute chart. We've had really, price doesn't move in a straight line. It moves higher. You have volatility come in, a little bit of congestion, then it moves higher a bit more, then it pulls back. We look at the volume on that pullback. Does it confirm that this is a reversal, or is it just simply a secondary trend in this move higher? No, the volume was falling away in these down candles. Then it goes, then there's a little push higher. Then it stops at congestion again. We can see this, this moving sideways. The volume point of control moves here, very key part of the chart, fair value, fulcrum, however you want to describe it. And then we have another push higher, and the volume comes in because it's 7 o'clock in Europe, and then a lot of volume coming in London, because the sessions they're not equal. You have different levels of a participation. Does it invalidate your analysis of the price action and volume? No, not at all. What's interesting at the moment is we're looking to put in, is this going to be a 2-bar reversal? Well, we'll just have to wait and see. There's not a lot of volume going into that down candle based on the CSI. Well, the pound is certainly still pushing higher on this time frame. We will just have to wait and see. But I'll pass over to David, because have you spent more time on this one, David? Yeah, David spent a little bit more time than I have on it. As I said, I just picked it up from 7 o'clock this morning, so I'll pass over. If you've got any questions, just drop them into the chat box. More than happy to answer them for you.